All right, we are live. Parker, thank you very much for joining us today. How you doing?
No problem. I'm doing fantastic. Thanks for having me on, Gabe.
Absolutely, I love it. To get us started, why don't you tell everybody, who you are, where you're from, and how you got started in real estate in the first place?
Yeah, absolutely. So my name is Parker Smith. I'm originally from Las Vegas, Nevada, but I live out here in beautiful San Diego, California. I've been here for the last 12 years. And I got started in real estate. I've always had a passion for real estate. Really, uh, I'm an attorney by trade and got started just by investing in smaller deals um, through the network that I was able to build out here in San Diego. Got introduced to um, some some opportunities and wanted to get my feet wet, so I kind of jumped in and then since then, about a year and a half ago, with a couple of my business partners, we started CalTier Realty, which is really opening the door for a lot of people to get into commercial real estate.
Awesome, I love it. So it sounds like you're not from San Diego. You got started in Las Vegas. Is that you went to school, or not Las Vegas, in Nevada? You
Yeah,
went to
yeah, in
school
Las
out there.
Vegas. Yep. So
Okay.
I went to that's where I grew up. Actually went to school in Utah, Provo,
Oh,
Utah.
nice. Okay.
So
Cool.
BYU. And then I came out here to California and been here ever since.
Nice.
So
I love it. And you're an attorney by trade, so you got that
yes.
background. I've noticed
Yep.
attorneys tend to do very well in real estate, so that's a good feather in your cap there.
Good. Yeah, it's all right. I don't know about that. But yeah, I'm excited. It's a good background to have for sure when dealing in real estate. So
Awesome. So you got started however many years back, and you were an attorney, and you were investing in projects on the side with your
mhm.
friends, or with the network that you had developed out there in
Yes.
San Diego.
Yep.
And since then, you've started your own company called CalTier.
hmm
And so let's just jump into that. Let's hear a little bit more about CalTier from our conversation earlier. CalTier, you guys are kind of democratizing the access to high grade
Yes.
institutional investing. So kind of tell us, what do you guys do, and what made you want to jump into that area in the first place?
Perfect. Absolutely. So, I guess before I jump in and tell, I should say, because we do have an SEC qualified fund. So being an attorney, I know the attorneys are going to hate me if I don't say it. So, if you want to check out our offering circular, you can go to our website, caltierrealtyfund.com, and that's where you can check out our offering circular, because we do have a live SEC qualified Regulation A plus fund. So it's a commercial real estate fund. So I do have to get that out of the way, but yeah, to answer your question, so I'm an attorney. I have actually, my law partner and I, we've had a law firm, for about 6-7 years now. I was investing in some real estate deals, as you mentioned, through my network, and and between myself and a couple other, I'm one of the managing partners of CalTier Realty. There's two other managing partners. So between the three of us, we were noticing, hey, look, I always wanted to get into real estate. I didn't know how to get into real estate. I heard, I actually, attended some of those, seminars about how to flip a home and do all that, and which is a great source of income. Don't get me wrong, and looked into other avenues. But as I mentioned, I got introduced through my network just by luck, and then in kind of, who type thing, which often real estate is, and had the opportunity to invest in a couple bigger deals, commercial real estate deals, multifamily, value add opportunities. And, it hit me, if I wasn't so lucky to get in with that network, how would I have invested in something like this, right? What are my options elsewhere? And so that's kind of the passion that drove us to start CalTier Realty. Is we wanted to give the access to everybody, to the everyday consumer, to be able to participate into what we consider institutional grade assets. Typically you're talking multifamily that can range anywhere from 100 to 300 units, in core locations. There's a value add component to it. Typically, these are off market. And so not everyone has access to those. It's typically reserved for somebody who's a accredited investor, who's in a particular network, and the minimums generally start at 250,000 or up, right? And so if you don't have $250,000, you don't know somebody in that industry, and you're not a accredited investor, how do you participate in those? And that's really what drove us to start CalTier Realty. And that's, so we worked, it took us about a year to get it right, but we worked with working with our attorneys, our SEC attorneys, to get it qualified by the SEC. So our fund is now live as of the end of last year. And
congratulations.
I appreciate it. Thank you. It was by no small feat. It did take a lot of work, a lot of back and forth with our attorneys and with the SEC, obviously, to get it qualified. So it's a live fund, and really anyone over the age of 18 can participate. You don't have to be an accredited investor. You can be, but you don't have to be. And the other component to it is we do have, with our background, our international background, right? We have a couple of my partners were involved in the EB-5 program at a regional center. Our firm does immigration law, and so we have a lot of international investors that it's open to as well. So that's another driving force, is we saw the need to bring in, a lot of our clients were asking, hey, how do I get involved in real estate? I'm invested in this EB-5 project. It's maybe getting me 2-3% if I'm lucky, right? More like a percent or 0.5% typically. And how do I invest in something that will actually generate a higher return? I like U.S. real estate. I like the market. It's more stable. It's kind of a safer place. I have money to deploy. How do I get involved? And so we want to open up to our international investors as well.
I love it. I love it. So what do you, how much do you guys have under management currently? It sounds like you're focused more on multifamily. Do you do office? Do you do retail?
So yeah, personally, I've been, I've been involved in deals outside of multifamily. But that's kind of our bread and butter. When we designed the fund, we specifically designed it, it is a multifamily fund.
Okay.
And the reason being, not that we appreciate all other real estate asset classes. We like multifamily, and specifically value add, opportunities that are existing, not ground up, only because we want to generate a cash flow. We want cash flowing assets. So we want assets that are cash flowing, typically day one, not always the case, but typically day one, they're cash flowing, and they do have a value add component to it. So you can go in and you can rehab the asset. Maybe you want to upgrade the interior, do some exterior work, maybe the amenities, right? So that you can ultimately raise rents and then increase the value when you sell, right? So
nice. And so do you already have projects? You've already deployed capital. It sounds like you already have something under management.
Correct. Yeah. So we have currently, so CalTier as a company, I have to clarify. So the fund in general, the fund is, like I said, we started the end of last year, and with coronavirus and that thing. So the fund itself currently does not have any assets under management.
Okay,
I want to be clear about that. But CalTier as a company, we are a fund management and acquisition company. So we do have multiple funds. We have what we like to call direct acquisitions, right? So on top of the fund, while we were waiting for the fund to get qualified with SEC, we went out and through a Reg D, which is for accredited investors, we deployed money into a few assets, right? So we have right now assets under management. We have about $60 million of assets under management.
Awesome. And this is all in multifamily?
In multifamily, yep.
Awesome. I love it. So I mean, taking the perspective of the ones you have under management, 60 million AUM, that's awesome. I mean, it's more than most people, vast majority of people have. So I mean, it starts with the process. At the very beginning of that process is finding the deal.
Yes.
And so, I mean, you've said it before. You're really big on networking. Most people on the show, they come on, they say networks is the biggest thing.
Right.
So when it goes to finding those deals, finding those multifamily, I know multifamily is super competitive now. What
Yes.
is the thing that you do? What do you do to find these value add multifamily deals?
Perfect. Yeah, that's a fantastic question. So I will say when we started CalTier Realty, we didn't set out to reinvent the wheel, right? There's we have a vast between our team, and not only the three managers, but also the rest of the team, right? We have a director of acquisitions, and that we have a great network. And so one of the things that actually does set us apart, and I'm glad you brought it up, is that we embrace the partner model. So we don't have to go in and we don't have to be the hero. We don't have to go in and take down an asset all by ourselves, right? We embrace the partner model. So not only do we have a vast majority of a network of brokers that will send us deals that are typically off market, but we also, through our partners, we there's no shame in us going in as co GPs or coming in as an LP structure, right? To a particular asset. And so that's how we're able to find deals and find deals that we, you know, um, obviously in our opinion, we feel are prime real estate opportunities, right? Every real estate deal is different, and every real estate has risk involved.
Of course, of
But
course.
for us, we feel like these are real estate opportunities that the typical firm or person may not have access to, or may not see, right?
Yep.
And so we have a couple partners that we've worked with in the past, and we're actually looking at a couple deals right now with some of our partners that either we found the deal through our network of brokers, or they found the deal and we're doing a joint venture with them, either a co-GP or coming in as an LP on that asset. So
Awesome. So it sounds like a lot of partnerships, a lot of JVs. You find
yep,
them through, I mean, either party. It sounds like mostly brokers. You guys don't do any
yes,
marketing. You're networking,
yep,
connecting with other brokers in the field, and then through that you will be finding the multifamily deals.
yep,
Um, I would be
absolutely.
completely remiss if I didn't go in the direction of your law degree. I mean,
Sure.
just from the way you speak, you're very you know what to say, and so we need to ask something about the law. You've
Sure.
already spoken a bit about structuring partnerships, so I
Mhm.
want to go into that a little bit.
Sure.
I mean, a lot of people listening to the show, watching, they've considered doing a JV with somebody else. They've
Mhm.
considered partnerships. So, in your opinion, what is the best way to structure a deal? And I guess, what are the pros and cons of the different ways of structuring partnerships?
Yeah, absolutely. So if we're talking specifically the partnerships, I think one thing that's helped us is what is everyone bringing to the table if you're structuring a deal, right? So if you're bringing the you know typically you'll need someone, because all our deals are levered, right? Or I said most of our deals are levered, right? So you need somebody that can sign the carve outs, right? So you need somebody that has the balance sheet to be able to sign the carve outs. You need somebody that if you're doing a value add, you need somebody that has experience and that can do the construction management, right? You need somebody that can do asset management. Um, Typically, we'll bring in a third-party property manager, unless it's local, right? So so it really depends. So from my perspective, the best thing is to outline, okay, what is everyone bringing to the table, right? And then you got the capital, right? Who's bringing the capital, and so start from there, and then you can go, you can break it down into, okay, you know, maybe it's best structured as a co-GP structure where you both both are responsible for the due diligence, right? The due diligence cost. If you have to go hard or maybe some put some money down, like you both are equally responsible for that. And then yeah, again, like I said, who's doing the asset management, who's doing the construction management, or are you hiring a third, is there a third party you're bringing into the mix, right? And so that's I guess my biggest recommendation, and I know that's not probably the legal aspect of it, but figure out who's bringing what to the table, and then kind of go from there. And then there are laws and rules that you have to worry about when you're talking about you're bringing someone to the table. Is there's issuers exemption and other things you have to go into, as far as like you can't be paid strictly for the capital you bring in and that kind of thing, right? So really outline who's doing what, and then when you're actually putting the deal on paper, and I have to say this as well, like I'm an attorney by trade, but I'm not a real estate attorney as far as like putting the deals down. So work with a good real estate attorney that can actually guide you on actually putting the deal down on paper. But again, the biggest structure is who's bringing what to the table, what are everyone's roles, and then figure out from there how that would look. And work with a real estate attorney, obviously.
Yep, obviously, yep. I love it. So, so who's bringing what to the table? That is the thing that matters the most when it comes to creating a partnership. And
Yes.
It sounds like in your perspective, there are basically four different positions in a partnership. You got your construction management, your rehab, or your management, asset management, your construction management, whoever's bringing the capital. There was a fourth one, but I forgot to write it down. What was that fourth one?
So then you have the property manager, right? So the property manager, typically, like I said, typically for us, it's a third party. So for instance, we have we have a deal in Killeen, Texas, of all places, right? And one of the reasons why we like Killeen, on a side note, is because it's close to a military base, right? So the asset is right by Fort Hood.
Yep.
And which is one of the bigger military bases in the U.S., if not the biggest. So we like that aspect of it, that it's close to military, which we find fairly stable, right? Especially during these times. So we have an asset in Killeen, Texas. Obviously, I don't live in Killeen, Texas. Our network isn't really, we don't really have too many ties to Killeen, Texas. And so we have a property manager that is the
boots on the ground,
brought on, that manages the property, right? And so they're responsible for getting the leases, and they're responsible for
and that's a hired
yes,
property manager.
Hired
It's not a partner.
Yep. Right. Correct. Yep.
Gotcha.
So that's the fourth one. Mm-hmm.
Gotcha. Okay, so again, on the legal side, I mean, every time that I buy a property, I put it in an LLC. I know you're not a real estate attorney, but I'm going to ask the question anyways.
Yeah.
Is there I don't know if that's best practice. It's what I was taught. Is there a better way to structure that? Is there a different type of legal structure that you'd put the property in, or and in what case would you change that?
Yeah, absolutely. So the short answer is and a favorite lawyer answer, right, or attorney answer is it depends, right? I mean, it depends on what you're trying to accomplish. But I will say typically, and it's not legal advice, but typically ours are in an LLC format, and that's typically what I see across the board. You want to create an SPE, a special purpose entity, and from the majority of deals that I see are held in an LLC format. So yeah, you're not wrong, but there are other structures, and that I would say, it depends on what you're trying to accomplish, what are your objectives, and your personal situation, right? But and the partnerships that you might bring to the table. But yeah, typically an LLC is what we see
Perfect.
across the board. Yep.
Awesome. Well, we try to keep these shows to about 20 to 25 minutes. So I'm going to move us on here just a little bit. We've heard a
Absolutely.
lot about, the CalTier Realty. We've heard about how you got up to this point. So I want to go a little bit into the stories because,
Yeah.
anybody in real estate, we have stories. Real estate, it's a roller coaster. You go
Yes.
up, you go down, you got your valleys and your peaks. So take us to the valley, take us to one point where, something happened that wasn't expected and that was a struggle. And then tell us what was the lesson that you learned on the other side of that.
Yeah, absolutely. That's a great question. So yeah, I'm trying to think of what's best story to tell here. So I will say, because I mentioned it before, the deal in Killeen, Texas, right? So so that one was a little bit rocky from the start. We actually, there was, back and forth on closing. We actually extended the closing date twice on that particular project, and ended up closing. Obviously, which is great. That's always a win. And so that happened. Last year, kind of fourth quarter last year, and everything was going smoothly. And then there was a fire in a number of the assets. Like, thank goodness nobody was hurt. But it, so it actually worked to our benefit in this sense, where we have insurance money that can actually help pay for some of the renovations that we were going to do anyways. So that helped us. So there's a fire, and then on top of that, then COVID happened, right? And so it's been a
When you're
rocky,
down.
yeah, it's been a rocky time with this asset, but through, we had another thing that happened as well that was a tragedy that happened to one of the residents in the asset as well. So we had three kind of strikes against us, right? Three opportunities for it to, but luckily, because we picked a solid what we think is a solid asset, right? It's like I said, it was very well underwritten, right, and underwritten conservatively, and so it's still producing. Occupancy is still 95% occupancy, and then we have the rent, our rents, our collections have not taken much of a dip at all, even through COVID-19 and through everything that's happened. So the lesson I would learn is a lot of times we get enamored by deals, right? And we look at the best case scenario, but that's not, you're going to have these valleys. You're going to have things that you don't see happen. None of us could say that we saw COVID happening, right? No one could have predicted COVID. I know that us and others that we worked with, predicted potentially a downturn in 2020, just because of the cyclical aspect of the market. But no one anticipated COVID or a pandemic happening to kind of cause that. So, or accelerate that, or whatever, however it happened, right? So really it's doing, being able to really analyze a deal and look at it conservatively, so that if things like that happen, you're not underwater, because that happens to a lot of people, right? They underwrite it to the best case scenario, and when something happens, then
Shit out of luck.
Exactly. So if you underwrite it very conservatively, you can absorb some of those blows that happen along the way.
I love it. So it sounds, I mean, you guys, it sounds like you had this property in Kling. You were just repeatedly hit when you're down three times. Things happened, but you came out the other side because you did your underwriting correctly.
Yes,
So the
absolutely.
great lesson, it sounds like there are actually two lessons. The first one is have insurance.
Yes,
Um,
have insurance for sure. Yep.
And the second one is when you underwrite your properties, do it conservatively. You never know what can happen. Coronavirus, nobody could have predicted that. So make sure that you're conservative when you underwrite your properties. And if you do that, hopefully, crossing fingers, it should be a good asset into the future.
Yep, absolutely.
Awesome. So that was the trough. Bring us to the top. Tell us you're still here in real estate today. So you've gone through the bottom.
Sure.
Why do you keep going to it? What gets you out of bed for this?
Yeah, absolutely. Like I said, it's really, I say real estate is my passion, and partly because I do, I do have a finance background, and I really, you know, I do. I say dabble a little bit in, in the stock market and individual stocks. I do enjoy that as well. Um, but really, what really drives me with real estate is historically speaking, and any finance class you'll take, and anyone you talk to, that has preserved their wealth, typically does it in some form of real estate, right? They have some real estate is a part of their portfolio, and the reason is it over the long run, it will go up in value, right? And you talk about supply and demand. There's only so much real estate out there. There is a lot, right? But there's only so much out there, and so it is going to go up over time. And so that's really what drives me is knowing, if I really want to, preserve, generate wealth and preserve wealth for my family, real estate is in my opinion the best avenue to do so, and to create that financial security for myself, my family, and future generations. It's something that can be passed on to future generations, and that's really what drives me. And it is fun. It is fun. I enjoy the peaks and the valleys, and being along the ride of closing deals and getting deals done. So
Absolutely. And I mean, you're absolutely right. They're not making any more land. So real estate is, there's a reason that it keeps going up.
yeah,
Population keeps growing. It's not going to stop. I heard until 10 billion people. So we got a ways to go. So, um,
we got a long ways to go. Yep, that's right.
awesome. Well, Parker, I really appreciated having you on. I know I can speak for everybody listening and watching. We appreciated the wisdom you shared today. We all need to receive things as well. So if you wanted to receive something, someone were to bring something to you from, listening or watching to the show, what would that be?
Yeah, and I'll go back to what I said from the beginning. Part of our passion when we started CalTier Realty is we really wanted to provide access to what we consider to be prime real estate opportunities. And so I would just, and anyone listening that wants to participate in real estate, maybe doesn't have the experience or network, or even, maybe you have, for our fund, you can put in as little as $500, right? You can put as much as, 50 million if you want, right? The fund's $50 million. It's a $50 million fund, right? But yeah, anywhere from $500 to $50 million, you can go in and you can participate in some cash flowing assets. It's a portfolio of assets. I want to make that clear, because sometimes we get questions about that. But it's a portfolio of assets, so you can invest in, an asset in Austin, Texas, in San Diego, California, and Seattle, Washington, and just for example, right? There is a portfolio of assets you can participate into with as little as $500. So if you want to find out more, go to our website, caltierrealtyfund.com. You can go to our corporate website, caltierrealty.com, to find out more about our company in general. If you're interested in a direct acquisition, you are a credit investor, we can do that as well. But if you're just a beginner in real estate, check out caltierrealtyfund.com. That's why we put it together, is for consumers to participate in those types of deals. So
Awesome. I love it. And that is actually the next question. If somebody did want to get in contact with you, CalTierRealtyFund.com, is that the best way for them to do it?
That's the best way to do it. You can email me. I'll give out my personal email. That's one of the things too, is we like to be, I love having conversations with people. So you can email me directly at parker@caltierrealty.com. And it's spelled CalTier and then realty, REALTY.com. So
perfect. So you guys heard it. If you want to get in contact with Parker, if you want to invest in his fund, you can get him at parker@caltierrealty.com. Or I will put his LinkedIn profile in the notes. You can also go to caltierfund.com.
yes.
Again, Parker, thank you very much for coming on. I appreciated it. I know everybody listening and watching did as well. For everybody that's with us today, thanks for being here, and we look forward to having you guys on the next episode.
Appreciate it. Thanks, Gabe. Thanks for having me on.
Thank you for joining us on the Real Estate Investing Club. If you've watched this far, I'm sure you've gotten a little bit of value out of this. So we would appreciate it if you hit that thumbs up, share it with your friends or family, whatever it may be. And if you'd like to share or partner with us on a deal, we absolutely love partnering on deals and are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode.